Hey everyone, and welcome back to the channel. Today, we re-demystifying one of the most popular ways to start investing, the S&P 500. If you ever heard people talk about investing in the market, this is often what they mean. And the best part, it's incredibly straightforward for beginners. So let's break down how you can get started, step by step, and cover some essential rules to follow. First things first, what exactly is the S&P 500? Imagine a basket containing stocks from 500 of the largest, most established companies in the United States. Think Apple, Microsoft, Amazon, and Google. When you invest in an S&P 500 index fund, you're buying a tiny piece of all those companies at once. This is amazing because it automatically diversifies your investment. Instead of putting all your eggs in one basket by buying a single company's stock, you're spreading your risk across 500 different ones. If one company has a bad quarter, it's balanced out by the other 499. This built-in diversification is rule number one. Do you try to pick individual stocks? Buy the whole market instead. It's simpler and historically much more effective for most people. So, how do you actually buy into this? You can't directly buy the S&P 500 index itself, but you can buy funds that track it. These are called index funds, or ETFs, which stands for exchange-traded funds. Popular examples you might see are VOO, IVV, or SPY. To buy them, you need to open a brokerage account. Think of a brokerage account like a special bank account for your investments. There are tons of great low-cost options out there like Fidelity, Vanguard, or Charles Schwab. Many new app-based brokerages also make it super easy to get started right from your phone. Opening an account usually takes just a few minutes. You'll provide some basic information, link your bank account, and you're ready to go. Once your account is set up and funded, you just search for the ticker symbol of the S&P 500 ETF you want to buy, like VOO, for example, and decide how much you want to invest. You can often buy fractional shares, meaning you don't need thousands of dollars to start. You could invest as little as $1. This brings us to rule number two. Consistency is key. The most powerful strategy for building wealth with the S&P 500 is called dollar cost averaging. This just means investing a fixed amount of money on a regular schedule, say $100 every month, no matter what the market is doing. When the market is down, your $100 buys more shares. When it's up, it buys fewer. Over time, this averages out your purchase price and removes the stress of trying to time the market. Don't try to buy low and sell high, just buy consistently. Now, for maybe the most important rule of all, think long-term. The stock market goes up and down, it's totally normal. You'll see red days, red weeks, even red years. The key to success with the S&P 500 is not to panic when the market drops. Historically, despite all the crashes and corrections, the market has always recovered and trended upwards over the long run. We're talking about a time horizon of at least 5 years, but ideally, decades. This isn't a get-rich-quick scheme. It's a get-rich-slowly and steadily plan. Your job as a long-term investor is to buy and hold. Set up your automatic investments, and then try your best to ignore the daily noise. Don't check your portfolio every day. Just let your money do the work for you through the power of compounding. So, to recap the rules. 1. Diversify instantly by buying an S&P 500 index fund instead of individual stocks. 2. Be consistent. Set up automatic investments and use dollar cost averaging. And 3. Think long-term. Stay invested through the ups and downs and let your money grow for years or even decades. That's really all there is to it. You don't need to be a financial genius to build significant wealth this way. By following these simple steps and rules, you can put your money to work and start building a more secure financial future. I hope this video made investing in the S&P 500 feel much more approachable. If you found it helpful, please give it a thumbs up and subscribe for more simple finance tips. Thanks for watching, and I'll see you in the next one.